Welcome to Every Dollar Counts with Josh and Jay, a shot of true serum for your investment and insurance questions. I'm Josh Knoll, the owner of Gulf Coast Financial Advisors, and I'm joined by my co-host, Mr. Jay Stubbs, the Regional Director for First Protective. We are brought to you on the Prime Capital Investment Advisors Podcast Network. Now, Jay, we normally don't do our podcast quite like this. This is we got a little different thing going on here. And we don't timestamp our podcast, but I think it's safe to say that right now there's not a whole lot of normal out there. So listeners, we are recording this on April 14th, 2020, in the midst of a COVID-19 pandemic and during a time of extreme market volatility and uncertainty. As many of our listeners know, Jay and I decided weeks ago that we would attack this crisis to the best of our ability by pivoting our podcast and our content to ideas and concepts that could potentially help people out there navigate this crisis. So with that said, you all are tuning into our Leadership in a Time of Crisis series. And what you're about to hear is going to be from the leadership and the executive level of my independent RIA, Prime Capital Investment Advisors. Today, you're going to hear from someone that I consider a leader. His name is Scott Colangelo, and he is the chairman and managing partner of Prime Capital Investment Advisors / Qualified Plan Advisors. Scott's going to give you a behind-the-scenes look of this decision-making process for a large independent RIA in an unprecedented time of crisis. I can promise you're going to hear what Scott has to say. Before we get into all this, though, let's have our friends from Sloth Racer kick us off. Jay, Scott, how y'all doing?
Well, Josh, it's good to be with you. It's a busy week, and it's only Tuesday midday. Like you said in your intro there, we're April 14th. We're a day away from tax day of what normally would have been a traditional tax day. Now we get a little breather on that. Don't have to worry about that until July. But it's good to be with you, and certainly good to have Scott here with us on this podcast.
Yeah, thanks, guys. I'm sitting there thinking about it, and you mentioned that taxes are getting pushed back. So I guess this whole pandemic isn't that bad.
Right. We all were forced how to use technology quicker than any of us intended to. So, well, quick housekeeping for compliance, Scott, and then I've got a couple questions for you. Jay Stubbs and First Protective are not affiliated with Prime Capital Investment Advisors, nor with Qualified Plan Advisors, nor with Gulf Coast Financial Advisors. And Josh Knoll is of Gulf Coast Financial Advisors, not affiliated with First Protective. So with that said, Scott, I want to, for the listeners that are not familiar with you, can you take us through your career briefly in the financial services and bring us up to speed today on what your role is with Prime Capital Investment Advisors and with Qualified Plan Advisors?
Yeah, absolutely. I'd love to. This is my 26th year in the business, and seen a lot of change. I started as essentially just a stockbroker. I got very lucky to work with a good one that trained me really well early on. And then we moved really into more of the fiduciary aspects of the business, the wealth management as a fee-based advisor, and retirement plans also as a fee-based, fiduciary-based advisor. So I've seen the industry change quite a bit, move more away from product, more to fee-for-service, and I think a better model for today's investors and consumers, and been lucky to have a lot of growth. And in today's role, I was a minority owner of a large RIA, national RIA, for quite a while, and then we ended up currently one of the majority owners and the chairman of that organization now.
Scott, this is unprecedented times. You said 26 years. I can only think back in my 21-year career of a couple of different situations. You hadn't seen anything like this ever, have you?
No, I've seen crises before. I've been lucky to be in 4 of the 5 worst markets in the history, with the Depression, obviously, but then outside of that, 9/11, financial crisis, the tech bubble, and now this. So all of them had unique characteristics. All of them created more opportunity than normal market cycles do. And I think that's what this has done. I mean, our organization views this as an opportunity to service our clients and to really as an opportunity to make money today and do well if you're bold enough and thoughtful enough in your processes.
Well, one of the things I do have is a qualified plan with my employer. It's something I've had and it's part of my overall financial plan for over 20 years. I haven't looked at it. I have a feeling. I know what it looks like, and I'm a little nervous. But I'm 43 years old. I got to keep things in perspective. I'm 20, 25, maybe even 30 years out from even tapping into that thing.
Right.
So, what do you say to somebody who's listening to this going, I don't want to look at it, or when I did, I got my stomach started hurting and started thinking about things and having to, capture all those losses right back. Because in a qualified plan, unless we've sold out of our position, really it's not a loss because everything's still in there, still invested.
Yeah. Yeah. And we're saying exactly what you said. Listen, like you said, you're 43. It's going to be different than someone who's 65, right? You're 43. You can make the argument, get as aggressive as you possibly can right now and continue not to look at your statements if you believe in this country long term. For people closer to retirement or that are in retirement, if say they're in a more conservative allocation already, you could argue maybe they should start putting their future contributions into something more aggressive right now, dollar cost average into something more aggressive to take advantage tactically of these markets that when they recover. Here's the best part about diversification. In a normal market, it does well. And in a down market, it tends to cut some of your losses. But in a recovery market, this is the fourth really bad one I've been in. Typically, it underperforms diversification. So there's opportunities for you to be a little more tactical and thoughtful in what you're doing with your money and your retirement plan.
When this crisis really started unfolding, Scott, while Jay and I were getting out ahead of this to the best of our ability, we kept coming back to right now your 401k is just like your face. Don't touch it. So as we started figuring all this out, Scott, I want to ask you this. This is a multi-part question, which I'm notorious for, but can you give the listeners that are not familiar or very familiar with Prime Capital and with qualified plans kind of an explanation of what those organizations look like? Then I'm going to walk into what the leadership looks like. And then that's going to naturally lead us down the road of what kind of decisions are you all having to face in your unique roles. So let's start with that, if you don't mind.
Yeah, so Prime Capital is a federally registered investment advisor, one of the larger ones in the country. And then we're doing wealth management, essentially, cash management for corporations, wealth management for individuals of all sizes. And then qualified plan advisors, we do fiduciary work on retirement plans. We help screen the funds, help them negotiate their fees, help build education programs for their participants and things like that. As far as our leadership, I sit as our chairman, but really the day-to-day management is done by our CEO, Glenn Spencer, who used to be CEO over at Lockton. We have Brian Dilbeck as a CFO, who has been a CFO for 2 publicly traded companies. We have John Siebold, who came from Medtronic to be our COO. We are so lucky from a leadership standpoint. You got to understand, most registered investment advisory practices nationwide are run by advisors that kind of, they started to do well and all of a sudden their business grew. And next thing you know, they wanted to be a CEO. Tim Hakes and I, who have been partners for a long time, and he's co-chairman. He and I very quickly, when we bought the company, we looked at each other and said, "You want to be CEO?" And we both laughed. We knew we don't have the skill set for it. So we went out and got one of the best CEOs in the country. And so I think from a leadership standpoint, I'll put us up against anybody. And that's not a reflection of me talking about myself. That's talking about John and Brian and Glenn and just the amazing leadership that they've provided us through this. This is a great example going through, never waste a crisis, right? We've learned more about our people. And I'd say we've become such a better organization through just in the last 2 months than probably we had in the last year.
Well, Scott, on that note, because we're going to have a lot of the leadership of Prime coming on this series. This is really dedicated towards that level of leadership. Can you kind of, as this thing started to emerge, kind of give a behind the scenes look at, how were you all collaborative? How did you all communicate? Do you feel like everybody really stepped up and the communication went to another level? To be honest with you, Scott, there are probably companies out there that for a while probably ran around with their hair on fire to a certain degree. Yeah. How do you feel you all went the opposite direction? Because I can tell you, as an advisor affiliated with you all more than 1,000 miles away, I could tell that you all were getting a grip on this pretty quickly. So give us behind the scenes look at that.
Yeah, it starts with what are your overall beliefs as an organization? And we talk a lot about that we have 2 sets of clients, our clients and our advisors. And you have to take care of both, and you have to put them at the top of the pyramid. And ultimately, when you do, it becomes simple. And so here's the deal. The things that came really right to the forefront early on, and a lot of this came from the people who'd been in the business longer, me and Tim and Joe Hildebrand and others, was you have to over-communicate in these times. And so first thing we did is figured out what are our capabilities technology-wise. We had to push the envelope there to make sure like this, having FaceTime meetings, Zoom meetings, all those types of things are so valuable. And be able to do it in a manner where you can operate as though you're sitting in front of somebody. So we had to instantly get better with technology. We had to make sure we could work remotely and have access to all of our systems, handle all of our trading remotely. So structurally, you have to make sure that those are in place. But then you move on to, okay, then what are you trying to execute? And there's two things. The first is trying to call we've been stressing, call your clients every week. If you have 300 clients, call them every week. It doesn't matter. This is the time they need the hand holding. You want to help them make good decisions. Over communicate with them. We've been trying to over communicate with the advisors. We're doing weekly calls, emails, everything. Our retirement plan participants, we're doing 2 webinars a week for them right now. We've had so many people call in that the first one we did, it shut down the webinar system because everyone got kicked out. And so you got to over communicate in those. And the second thing is we have to grow as an organization, not just in the getting better with technology and all that, but we want to grow. I mean, we want new clients. We want to acquire new clients and make them part of our family of clients. And so the thing we did is we said, call your current clients once a week, call your prospective clients every other week. And I said, imagine this. I was on the call talking to our whole organization. Imagine at the end of this crisis, they look back and go, God, I don't even have any business with Josh. And I talked to him 10 times and I talked to my advisor twice. And so these are good. This is a time to leave a lasting impression with people that want to hear from their advisor.
Scott, historically, a retirement strategy is formed with the help of people like you and like Josh, trusted financial professionals. Historically, you look at your overall plan and you factor volatility in. But I just got to think the future of 401ks and qualified plans is going to look a little bit different from here on out. We already know that our everyday life is going to change forever. We've been obliterated as far as social distancing and our communication efforts and our meetings where we're used to seeing each other face to face. That's got to translate into a different type of qualified plan experience for employers and employees. What are your thoughts on what the future of that planning may look like?
Yeah, it's a good point. One, because of the amount of time we spent refining the technology these last couple of months, it's going to really allow us to get more into the space of companies that have many, many locations and have outside sales forces and be able to provide them better service than we ever have. So it's an opportunity to improve there. As far as retirement plans and volatility, listen, I wrote an article the end of December. It was published in a couple of different publications. And I said, look, the challenge we have today is that we're not recognizing is we just had the second strongest bull market ever and the least volatile 10-year period we've ever had paired together. And so expectations were just out of place. And I had a real concern. I wrote in the article, we are going to have far more volatility in the next 10 years. And I think that participants and others are going to make bad decisions because of it, which they have. It's not like you're sitting there going, hey, we're right. It was just logical. And so I don't know that we're going to have far more volatility. I think we're just going to be back to normal ranges of volatility. The only thing that could change that is, in the financial crisis, they did TARP with $800 billion, and we had so much cash in the system. We had a bull market for 10 years with no volatility because there's so much cash. Well, what they're doing now is dwarfing the TARP program. So theoretically, we could have a really fantastic 10-year number in equities just because the cash is in the system. Now we're going to have more debt and our dollar's going to get weak around the world. So there's just things like that we have to be conscious of. We have to be conscious that we're in a more normal, volatile cycle in the markets now. And, as far as one other comment I want to make, and I'll shut up. You sit there and we talk about our lives have changed forever because of this. That doesn't mean that's bad. Okay. What I've been telling people is view it as an opportunity to get better. Like, when we had 9/11, what really came out of that? Everyone said it's going to change our lives forever. We got a little bit of annoying TSA stuff we got to deal with now, right? It's not the end of the world. We probably tightened up, and we have not had a major terror attack in our country since. Is it worth the hassle we've gone through to have those results? Probably. And then also look at the pandemic. What I've told people is everyone's getting negative about it. I'm going, thank God this happened with a disease that has a very low death rate. If this pandemic had a 5 or 10% death rate, the economy could have collapsed because we were not prepared for it. We are going to be prepared for it now, right? We're going to have plenty of masks, ventilators, gloves. And so it just gave us an opportunity to get better and to be more prepared as a society. So I don't know that it's bad. I think it's probably putting us in a better spot dealing with this today.
Scott, I want to ask you a question because is it fair to say in your role that you're pretty heavily involved with qualified plan advisors? You tend to go more on the 401k qualified plan side of the industry, of the business. Is that accurate?
Probably 60-40. Yeah, I definitely do more in retirement plans. But with Matthew Eichmann leading it now, he's doing a lot of the heavy lifting. So,
well, to be fair, you were there from the beginning. You were kind of the one that built it from the ground up. That's fair. Okay. So on a plan participant level, how do you feel that qualified plan advisors has a different value proposition to people that will become even more valuable or potentially become more valuable as we emerge from this and there is potentially going to be more volatility in 401ks. What do you think QPA brings to the table to help that person that is not sitting there with their finger on the pulse of this every single day, nor should be? What kind of things can we bring to the table for them?
I think the biggest thing is that we have over 100 people that can go out and provide education. That by far makes us the largest RIA from an education standpoint. No one really, there's RIAs, there's fee-based advisors on retirement plans that have more assets than us. Not that many. We're probably in the top 15 in the country, but there's definitely some that have more assets than us. But none of them have the number of educators we have. So we really have the ability to listen to the participant, listen to the plan sponsor, and bring those communications together. We have the ability to get out in front of participants and help them take risk assessments. And we've invested in technology where we have our own link-based solutions where we can push a link to a participant and walk them through a risk profile live while we're talking to them. They could be on a cell phone, iPad, desktop. So the reality is what makes us different is the ability to connect the dots between the participant and the plan sponsor and make sure they both know what each other's needs, concerns, or what they're trying to accomplish. It's powerful for us to be able to sit in front of the participants and go, your plan sponsors care about you. They've hired us to be here in front of you. You didn't have that service before. They care and they really want what's best for you. And they put a lot of time and money and take risk in giving you a great retirement plan. Our job is to make sure you take advantage of it and don't waste the opportunity. Don't leave money on the table. At least put money in that give equals to what they're willing to match you to. I mean, listen, you're not going to make a participant a Peter Lynch and a mass, just an expert investor over time. What you're trying to do is help them avoid bad decisions, 4 or 5 bad decisions in their life. Keep them in the market when the market gets a little ugly. Don't let them jump out. Keep them investing. Don't let them stop investing because the market gets bad. Make sure they're invested right for their risk tolerance. There's some basic little things that if you do, that we have the ability to do with the amount of manpower we have. That's just a differentiator, putting us against other advisory practices in the industry.
Well, and I think I've got one more thing to say, and I know Jay's got a couple of questions for you, but I think another thing that makes a difference, Scott, and you've kind of been with the same group as it's grown over the years, whereas advisors like me have come from outside different organizations. So we've seen kind of different ways other companies do things, if you will. And I'll tell you this, you'll get a chuckle out of this, but Jay and I actually got asked to be on a pretty popular local radio show last week. And the point of the reason they wanted us on is we've developed a reputation for already being ahead of being able to be in contact and service our clients electronically. Not that we eliminated the human touch to it, but part of the thing that Jay and I had going with all the different things we have going in our different respective businesses is the fact that we were already functioning 99% electronically. And I specifically told him, I said, part of that is the fact that the RIA, Prime Capital, that I affiliate with, had already made that push. So I was able to bring what I had to come to the table, combine that with it, and off they went. So there's my butt kissing moment for you on that on the podcast.
It's interesting. I hate to talk about frustrations because I'm such an optimist. The frustration for me in our industry over the last so many years is lack of collaboration between competitors. Like we can collaborate even though we're in the same business. But one of them is this false image that the industry is giving that technology alone is going to solve participant solutions. That's just not factual. They know it's not factual and they still sell it to plan sponsors and participants as the solution. It's on one hand, it's sad. I think it's somewhat dishonest. And I think it's disappointing. That being said, we can't do our jobs without those technology solutions. So I'm not bad mouthing the technology. I'm saying you can't tell everybody that is the solution to participants. Participants want somebody to hold their hand. They want to have somebody. Listen, they can go through the whole financial risk profile questionnaire. And at the end, when it says click this box and hit submit to pick your investments, they'll get to that stage on their own, then they won't do it. Whereas if they were just talking to somebody when they went through that, they'll end up hitting the button. I mean, even if that's the value of a human or an advisor to help them make a decision they probably know is right anyways, then so be it. But I totally agree. I think we're prepared as an organization technology-wise, but it's a tool. It's certainly not the overall solution.
Scott, one last question from me. Let's fast forward to a year or two from now. We know that in the country, studies show that job loss and health problems are the chief reasons that U.S. workers retire early. When do we need to start looking at our data, if you will, to figure that out? We already know that the jobless rate is skyrocketed to unfathomable levels. Yeah. When do we start to see a little bit of normalcy, and when do we start seeing people that are in their early 60s and saying, you know what, I can make this work. I'm just going to go ahead and do an early retirement, or I've experienced health issues. or I don't want to experience anything like this ever again. So I'm going to go ahead and cash in my chips and enjoy retirement.
Yeah, it's a great question. And it's something that isn't brought to light, even though we're all aware of it, right? I mean, I think we all know, like the stat you just said about people, especially people retiring because of health issues and stuff. We're not going to solve health issues for everyone. I will tell you that a lot of those health issues do start through financial stress, though. There's all kinds. We have mountains and mountains of data now saying that, that participants who have financial stress are, 70% less likely to sleep well and, 8 times more likely to have stomach and respiratory and digestive issues. I mean, stress, there's a certain amount of stress that's good for you, and there's a certain amount of stress that can actually leave you with no hope and create stress and affect your life, not just financially, but also in your personal lives and everything. Jay, it's a great point. I mean, I think we could do a whole segment just on that topic,
Oh, yeah.
I'll stop by saying I agree with you that there's plenty of data supporting that financial stress is one of the leading causes of many different health issues. And it's something that people don't pay attention to. And I think it's something that we need to bring to light more.
Perfect. Well, now that you've done this, Scott, you got to come back and do another one at some point, right? Yeah. Wait till you hear what Johnny does with the finished audio on the actual podcast. You'll be very surprised. So
we've injected a little bit of podcast serum into Scott's veins.
That's right. Yeah.
Well, Josh, my partner Tim real well. He's always said I had a face for podcasts. So yeah.
We all do. Yeah. Look at Josh. We all do.
I love it. All right. Well, I'm gonna bring this thing in for a landing. So, listeners, if you would like to reach out to the show, you can call or text 251-327-2124. Plus, you can visit gulfcoastfa.com or pciawealth.com to hear this podcast or any of our other podcasts. And for those of y'all listening, obviously I am a client-facing retail financial advisor. You can reach me through my various mechanisms. Scott Colangelo, he is upper level management at Prime Capital Investment Advisors, Prime Capital Wealth Management. Scott, you don't know this yet because you're just getting into our podcast world, but a lot of our listenership are other advisors. So I'm going to give you an opportunity before we wrap this up, maybe say a word to them. And then, of course, you all, the regular listeners know Jay Stubbs. He's in the risk management side and provides incredible value to advisors like myself, not only just on the podcast and all the content we do, but in a practical sense when we're looking at large cases with my clients. So, Scott, man, I want to give you an opportunity to wrap up the show on this, and then I'll say the final words. But first, you did a great job. So your show, man. Anything you like to say?
Yeah, thank you. Yeah, I know to other advisors who are listening, thank you for what you do. Your clients need you, and we value. I have a deep respect for people that are in this industry. It's about 50% psychology and therapy and coaching and stuff like that. 50% having to be good at what you do from the investment side. So thank you for what you do, everybody.
All right. Well, another show in the can. I want to thank Scott Colangelo of Prime Capital Investment Advisors and Qualified Plan Advisors for joining us today. I want to thank Jay Stubbs, my co-host. Thank our producer, Johnny Gwynn, who's coming into screen right now. He looks like the villain in a Bond movie, but I like what we got going there. And I also want to thank you all that have been joining Jay and I on this journey. Obviously, we did not see this curve that was ahead of us. Obviously, Jay and I did not see the need to do these leadership and building a brand during a time of crisis series. But I think based on the response we're getting, Jay and I and Scott and Johnny would all agree, the people that are actually on the front line of this thing in the hospitals, the doctors, the nurses, all those folks that are actually having to walk into the firing line of this virus really deserve our respect. And we say a huge thank you to you. We are doing what we can do because, as Scott mentioned earlier, there's no doubt that the financial aspect of this can make things like this get exponentially worse. So we're here to help you all and do what we can to guide you through this. You can always reach us on our various channels. So thank you for all of y'all that have joined us on this journey, and those of you that are joining us now. This has been Every Dollar Counts with Josh and Jay. Advisory services offered through Prime Capital Investment Advisors, LLC, PCIA, a federally registered investment advisor. PCIA, doing business as Prime Capital Wealth Management, PCWM, and Qualified Plan Advisors, QPA. Gulf Coast Financial Advisors is independent of Prime Capital Advisors. Information presented is for educational purposes only, is not an offer or solicitation for the sale or purchase of any securities. All investments involve risk, and unless otherwise stated, be sure to consult a tax professional before implementing any tax or investment strategies.